What is the relative strength index, also known as the RSI? The RSI is a super popular indicator that traders use to try to identify whether a stock is overbought or oversold. When the RSI is above 70, it's said to be overbought, and when it's below 30, it's said to be oversold. Traditionally, you want to buy when it's oversold and sell when it's overbought. If we look at this Snapchat chart, anytime the stock was oversold in the past 2 years, you would have been able to buy it and make quite a good return in a relatively short period of time. When the stock was overbought, you would have also got fairly good exits. Although you can see the indicator works almost perfectly in a ranging market, it works terribly in a trending market. And in a trending market, overbought can even be seen as bullish, as if the price is strong and more continuation is likely. As you can see here, when Snapchat stock finally started trending, if you sold when it was overbought, sure, you would have made a very good amount of money if you bought it when it was oversold, but you would have missed out on a 65% rally in quite a short period of time, and you would have only made about a third of what you could have made, which is kind of disappointing. Even though the stock was overbought here, it continued to get more and more overbought until the RSI peaked out at about 94. When looking at RSI for signals, we can also look for divergences. When the stock made a lower low, the RSI made a higher low in the same time period. That's known to be a bullish divergence, and as you can see, Snapchat had a massive rally afterwards. Another common mistake that I see people use when they're learning RSI and they're looking for divergences is they're not fully aware of when you can actually call something a divergence. I've switched to the Microsoft chart here, and if you look at the current price action, you can see there was a high here, and then another higher high here. Despite price increasing very clearly, you can see over the same time period, RSI has decreased. You might look at this and say this is a bearish divergence. This is simply not the case. Because Microsoft is still rallying, the trend is still intact, and we're not sure where the high actually is, it wouldn't be fair to call this a bearish divergence because we don't know where the high is. While the RSI looks to be at 69 right now, by the time the high is in, let's just say Microsoft's around 400, it could easily be at 75 depending on how linear the rally is. And if it was at 75, it would be a higher high in price as well as a higher high in the RSI, and that would not be a divergence. So when you're looking for divergences, just be careful to make sure you're using measured points when the highs or lows are actually already in.